market breadth is 3-1 in favor of advances at this point in time. 65 points is what we have. Atul Suri is our market master today. He's Chief Executive Officer at Marathon Trends PMS. He's with us here in our studios as well. Atul, it's always a pleasure. Great to have you with us here. Thanks very much.
Thanks.
What do you make of these? I mean, end of the year is supposed to be quite calmer, right? You're supposed to sit back and...
Absolutely.
This is last 5 days. On an average intraday, we've seen 200-point moves.
Absolutely. Actually, it's been the whole year, man.
Yeah.
It's been the whole year. You know, like last year, if you look at it, so to say we are 5% up for the year. Looks like a pretty flattish year, but it's been very violent.
Yeah.
In fact, if someone asks me what does this year mean for me, I think the trends haven't really held out. There have been so many switches. This time last year, it was tech, right? Remember all those IPOs were coming out? All the digital was the big one. Everything is off 50%. If you were to not look at something, it was PSU banks and banks. Because remember, banks were a dog a year after that. And it's the best performing sector. Then you had a move in commodities. Commodities corrected. So the year has been nothing but a case of very fast moving, short-term 3-month themes. And if you look at it, what is the genesis of this problem? Why has markets been so choppy? The reason is that actually globally the macros itself have been. Whether it is your talk about inflation, whether it's about bond yields, whether it's your war also. So there have been a lot of chops in this market. So as I said...
Macro cycles have gotten shorter, market cycles have gotten...
Yeah, and there are many factors that play together. So that's what's really causing that kind of choppiness. I mean, what you're seeing today or in the last few days is something that's what's been the year as...
Yeah. Actually, market views are also, I mean, they're so extreme.
Yeah.
You know, there are people who expect markets, a bust or a boom.
Like China COVID, okay, yeah. Like, I mean, it's not something that came new to us yesterday that suddenly, you know, you have 3 cases.
I think that was just an excuse. I mean, it was nothing,
Absolutely.
You know, I put that piece out day before yesterday.
I mean, it was like ridiculous. What happened is, and you look at global markets, everything was positive.
Yeah,
I mean, those 3 cases in India have caused like
I think markets also make opinions, right? I mean, if you listen to the earlier guest, Dilip Bhatt, he was talking about PSU Bank. Now, PSU banks have started falling, so now the problems start coming up, right? I mean, there's no consistent growth, there's NPA problems. So
I have an original line, right? And it really is important for you in your profession, which says that prices move, reasons follow.
I know, we know that. We've been you know,
so
witness to this for the last 15 years.
You have to justify every price move,
but
unfortunately.
You know, Atul, I am surprised to see you here, not in our studio, but in Mumbai at the end of the year. I thought you'd be in some Thailand or Goa.
3 more days. 24th.
Where are you off to?
So I'm going to an island called Boracay. It's in Philippines. Yeah, so it's a great place. I have friends in Philippines. So we are actually planning to head out to Boracay for
Thanks for making all of us here feel really bad about our New Year plans.
No, what I like about the island is...
Here next week.
I think the quality of water is better than Maldives.
Yes. I hope to visit Boracay someday. Sure. But about the market, you know, 2023, the expectations are low. So that's always a good thing, right? Everyone's entering 2020 with muted expectations. Is that your view as well? Do you think that the Nifty may not perform? And what's the target that you're looking at?
So since we are end of the year, lighter moment, you know, like every year we are asked these trend, next year targets. Even at Diwali we do it. But honestly, there is a template to it. Okay, let me tell you, there's a template to it. In India, every fund manager will come and tell you 12 to 15%. In the US, they'll all tell you 6 to 7%. And nothing really happens. We are the best performing market globally. We talk about 15% last year, we've done 5%. And US, everyone spoke of 6 to 7%. The US is down 20%. So at the end of the year, Sonia, these are all, you know, like there are fixed templates. Nobody knows what we've been speaking about earlier, that the market has had such swings, such mega macro moves. Who the hell knew that these things are going to play out the way they did? So to some extent, you know, we live 1 month, 1 week, 1 year at a time. And that's how we really have to play our innings. It's like cricket, you know, you can't say that I'll get 36 runs in the last over. You just have to keep taking your 1s and 2s and hope somewhere in the slog the target is achievable. So our life is, you know, people think that we know the end of the world, but we don't. Our ability is just to be able to adjust to changes. Our ability is just to be disciplined about it. And that is what it is. And that's why they say investing is more about 90% is about the emotion. And your emotion gets tested at those spaces. But honestly, to write a paper of what life is going to be 10 years from now. Who knows?
So let's talk about, you know, the...
Just to remind you, I only asked you for a 2023 target, not a thesis on life.
Yeah.
All right, so let's talk about the 1 week, 1 month, right? Because cycles are much shorter now. They're changing rapidly. Views are changing. Leadership has changed, as you pointed out. Last year was all about tech. Now it's about PSU banks, and who knows what it will be 1 month later. So tell us the near-term outlook now on the markets as well as the sectors that you like.
So I think what's interesting for me is, like, let's take equities, okay, as an asset class. So what's interesting for me is that the US, after a very good rally in the last 2 to 3 months, last week was pretty rough for the US. And for me, the thing that I look out in the next few months is that do some US indices start making new lows, 52-week lows. Now, let me put it that NASDAQ is just 5% from 52-week lows, right? The S&P 500 is only 10% from 52-week lows. The Dow has done much better. So for me, immediately in the equity context, and it will have its impact on India. Those markets are not going to make 52-week lows and we are going to make lifetime highs. It's not going to happen. We know that. At some stages, the global macro does play out. So I think the immediate concern for me in the next few months is how the US markets shape up. The issue is that, well, they are weak. However, if they make a higher bottom or put a higher bottom in place, I think then we can have a more reliable bottom, and that actually can be a fuel a bull market. But however, if US markets start making new lows, then sooner or later there is going to be a global issue. And linked to this is the issue of commodities. Linked to this is the question of inflation and bond yields. So all these things are very, very connected. And this year has really taught us macroeconomics 101, simply because all these things have had an overlap. I, for one, think that the US hopefully would make a higher bottom, or kind of hold out to these bottoms, and which would be a case of a longer term base building, which is, I think, very positive for global markets. The reason is that I think commodities per se, I look at commodity charts very, very closely. I do think that commodities will even drift lower from where they are. We may have a short-term spike due to China restart in the next few days or weeks, but I do think that commodities are headed much lower. And I think that would be very, very important in actually taming your whole inflation argument. Because once your inflation argument gets tamed, then the pressure on bond yields, the Fed, etc., come into play. Our biggest problem has been that the year has been, because of higher bond yields, all your growth stocks, and India is a big quasi-representation of growth. We are a growth market. All of them have actually got battered. So I think that the year that as it plays out in various asset classes, there will be games to play. But coming back to your question, is that will the US make lower lows or will it make higher bottoms? If it makes higher bottoms, I think that would make me very, very optimistic of global markets.
Atul, which are the sectors where you're somewhat confident that one should be in?
Yeah, again, sectors, very often we do have recency bias. Like everyone will say banking right now because they've done well last year. No one would say, everyone would say IT. So there's a recency bias to banking.
As a technician, you can't say IT. You got to go with what is doing well. So
we are trend investors.
Absolutely.
But the fact is that IT may be the. I'm not predicting, but that's what happens actually year on year, very often. Yeah. But apart from all that, the thing that I feel that's very interesting for me is capital goods and infra. I think that this whole sector is a sector that has been ignored since 2008. It's 10, 12 years that actually most of these stocks have not done well. A lot of them in the mid-cap space have started breaking out. The quality of numbers coming out are very good. And I think that this is again a sector which, what I saw in 2003-04, heading up to 2008, when these sectors or these themes play out, they can be multi-year themes. And as an investor, I'm looking for those spaces. So we are overweight cap goods, we are overweight infra.
What kind of names?
I think a lot of them electricals related. And there is also a bit of a PSU play that comes into things. These are, not the popular names. They're very unloved kind of plays, ignored kind of plays. But in the mid-cap space...
Not as an advice.
Not an advice. Like I have a stock called Apar Industries for that. So these would be very, very niche plays. But I think that there are a lot of such interesting plays that are there. I think electric mobility, that is another very, very important theme that are playing out. So I feel that infra and cap goods could be a surprise sector. Of course, you've got your bits of, PS banks and things like that, which is a larger theme at play. But I, for one, if I had to pick out one sector, I feel that capital goods and infra could be a very interesting theme going ahead.
Okay, in fact, that's a common view now. I mean, the last couple of days, many experts have, indicated that this is a space to be in, perhaps. What about autos? I think, apart from maybe M&M and, say, something like a Hero, which did about 12-15% this year.
Sure.
Rest of the auto pack is disappointed this year.
They gave back. They gave back most of their gains. That's exactly the point, that the trends have been so quick that if you really didn't book out, they've all come back to where...
Lost. Yeah, but you said electric mobility.
Yeah.
In that, M&M is up 50%, but do you see more there? And how do you really play this theme?
I do think so. And interestingly, more than just the end automakers, you should look at the ancillaries or the inputs that are going into play. So in the whole auto ancillary space, I think there are some very interesting stories, which are, suppliers for the electric place, or, even in the tech space, there are some stocks which are doing a lot in this autonomous driving and things like that. So I feel that is a theme that is playing out very well. That's a place that has a lot of traction globally. And one will have to look at, again, it's not like going to be a top up and, you've got a big sector theme. This is going to require a lot more research. But I feel that this is where you could get above average or, index beating kind of returns. Yeah. So that's what we are overweight, or these are the themes that we're looking at.
By the way, on cue, the market has already given up all those gains, as we were talking about, right?
Yeah.
We had 70 points, I think, at the day's high, and we're down about 5 or 6 points. So this is... basically what we've been seeing on days. Don't chase the moves, at least at open, is what we've been saying. So the high was 18,318. We're at just under 18,200. Yesterday's low was 18,162, which is a little lower than the previous day's low. So, you don't want lower lows. But for now, the market is looking a little weakish. Atul, thank you so much for dropping by. Have a great vacation. And enjoy yourself. And
be careful, there's COVID everywhere, so don't get stuck in Boracay.
It's not a bad place to be stuck in. I'm assuming.
Yeah, I think so. And thanks to online, everything is possible. So living your dream.
By the way, there was a news flash that the Prime Minister is going to chair a high-level meeting on COVID management. I just saw that. So, we of course had that on alert, right? So. Yeah. I think absolutely good to have awareness spread. And I think, as Gagandeep Kang also earlier told us, that you need to sort of test for the variants which are coming out, mutations, newer variants, etc. So that's always a good thing, to be on alert, to be vigilant. Markets absolutely flat, 14, 15 points now. Sonia.
All right, so let's get in our first corporate on the show now. Page Industries is on our radar. Remember, the company